The tax system that broke Australia. A nation built on land strangled by taxation. Australia is a country built on land, from the days of the first fleet to the modern skyscrapers of Sydney and Melbourne. Land has always been the most valuable resource we have. Yet, for more than a century, our tax system has punished productivity, rewarded speculation, and driven house prices to astronomical levels. It wasn't always this way. Once upon a time, Australia flirted with an idea that could have set it on a path of sustainable prosperity. A tax system based on land value, championed by Henry George. Instead, we followed a different path. We introduced capital gains tax, stamp duty, income taxes, and the goods and services tax, each of which chips away at productivity and entrenches inequality. As we stand in the middle of a worsening housing affordability crisis, with record low wage growth and an economy increasingly reliant on property speculation rather than real innovation, it's time to ask, what if we got it all wrong? What if we tax land, not labour and business, and change the game forever? The death of productivity, how our taxes punish work and reward speculation. Australia's tax system is a relic of an outdated economic model. It punishes work, investment and spending while turning property speculation into a national obsession. Let's take a look at how each major tax contributes to this dysfunction. Capital gains tax, or CGT, the speculator's best friend. Introduced in 1985, CGT was meant to create fairness, ensuring that people who made huge profits from selling assets paid their fair share of tax. But in reality, it had the opposite effect. The government introduced a 50% CGT discount in 1999 for assets held longer than a year. This meant that property investors who already had an advantage over first home buyers could keep buying up homes, sit on them and sell them later for a massive tax-free profit. This supercharged housing speculation, making property an even more attractive investment than starting a business or building infrastructure. Think about it, why risk investing in a startup, hiring people, or creating new industries when you can just buy land, do nothing and get rich? Stamp duty, the ultimate market killer. Stamp duty is one of the most destructive taxes in the entire economy. Every time a property is bought and sold, state governments take a massive cut, sometimes tens of thousands of dollars. This does two things. Number one, it stops people from moving. Older Australians sit on massive homes because downsizing means losing money to stamp duty. Young families can't upsize. People don't move to better jobs. Number two, it distorts the property market. Investors don't care about stamp duty because they're in for the long haul. But for first home buyers, it's just another roadblock keeping them locked out of the market. Stamp duty is an economic roadblock. It discourages transactions, kills labour mobility, and keeps people trapped in homes that don't suit their needs. Income tax, punishing workers, rewarding rent seekers. Every dollar an Australian earns is taxed, but if you make money from owning assets like land, it's barely taxed at all. This system punishes people who actually work while rewarding those who sit on appreciating assets. Imagine if, instead of taxing wages, we tax unearned wealth, the kind that comes from simply owning land in a booming market. GST, the tax that hurts the poor the most. The Goods and Services Tax, or GST, was introduced in 2000, supposedly to simplify the tax system. In reality, it's a tax on the everyday Australian. Rich people barely feel GST because they save and invest most of their money. Poor and middle class Australians feel it most because they spend almost all of their income on necessities that are taxed at 10%. At every step, our tax system punishes people for being productive. Meanwhile, it rewards those who simply own land and let the economy work for them. The broken system, why housing is a speculative nightmare. By failing to tax land properly, we've created a system where housing is no longer about shelter, it's about financial speculation. Land prices skyrocket because owners know they can sell later at a huge profit. Young people are priced out because investors outbid them at auctions. Renters suffer as landlords pass on costs, knowing demand will always be high. Productivity stalls because people spend more of their income servicing mortgages rather than investing in business or education. Housing should be about places to live, not vehicles for untaxed wealth accumulation. The solution: Henry George's single tax. Over a century ago, Henry George had a radical idea: tax land and nothing else. How would a land value tax work? A land value tax would replace all other taxes. No more income tax, stamp duty or CGT. Instead, Australians would pay a tax based on the value of the land they own, not the buildings, just the land. Why land value tax works. It stops speculation. If you have to pay tax on land every year, you can't just sit on it waiting for prices to rise. It encourages development. No more ghost lots or vacant buildings. Owners would be incentivized to develop or sell to someone who will. It's impossible to avoid. Unlike income tax, which people dodge with offshore accounts, land is fixed. You can't hide it. It's fair. The value of land comes from society, infrastructure, jobs, schools. So it makes sense for society to benefit from that value. What would happen if we switched to a LVT? Housing will become affordable without speculation driving up prices. Homes would reflect real demand, not investor greed. The economy would boom. People would keep more of their wages, meaning more spending, investment, and innovation. Small businesses would thrive. Instead of taxing income and profits, businesses would grow unburdened. The wealth gap would shrink. The ultra wealthy who hold vast amounts of land would finally pay their fair share. Tax revolution for Australia's future. For decades, Australia has been taxing the wrong things, punishing hard work while letting landowners and speculators reap massive rewards. Capital gains tax, stamp duty, income taxes, and GST all strangle economic activity, discourage investment, and push house prices even higher. The solution is staring us in the face. Henry George laid it out over 100 years ago. Tax land, not labour. Tax land, not business. Tax land, not consumption. By shifting to a single land value tax, we could break free from economic stagnation that has trapped so many Australians. We could end housing speculation, boost productivity, ensure everyone benefits from the prosperity that land ownership brings. The only question now is, are we ready to make the change? This leads on to part 3, where we'll explore the political challenges of the reform, the vested interests protecting the current system, and how Australia could transition to a land value tax without economic shock.